DeFi is trash. What up, nerds? My name is Luke. I help people interested in crypto get some returns on their savings through the power of DeFi. So I have a bit of a spicy take today, and that is DeFi is trash. Right? Back in the 2010s, there was a famous hedge fund manager called Ray Dalio, and his favorite phrase was to say, "Oh, cash is trash." And back in 2010s, this made sense because interest rates were basically non-existent. So holding cash, it was a zero yielding investment. So you could seek alternate investments in other places. There's no point in holding cash or bonds, right? Because they give you 0%. But that's not the world we live in now. We're in 2023. Interest rates are no longer zero. They're actually in a reasonable percentage rate. So in 2023, DeFi is trash. One of the things you're starting to notice, or at least I saw a headline there on middle of April, where Apple launches its savings account with 4.15% interest rate. And to me, this seems like a bit of a death blow to some of the lower yielding DeFi protocols and places you can get yield in DeFi. I mean, why would you put your money on chain in a potentially risky stablecoin just to get 3% when you could just use Apple? If you're already using Apple Pay, you can just use Apple's offerings, which goes on to, I think, JP Morgan or something. I'm not really 100% certain. I haven't got the article in front of me anymore. But effectively, you don't have to search for yield anymore. You can get an easy 4% just through savings accounts. You can get higher than that percentage if you have a loan. Like a lot of people these days have, you have car loans, you have student loans, you have whatever, all these different types of loans. If you're paying 5, 10, 15% APR on that loan, just by paying it off is equivalent of getting that risk-free return. Basically, if you pay off 5% loan, you've just made 5% on your money, right? So, I mean, you'd almost be better off with your net worth using these kind of low interest rate savings accounts and paying off loans than any kind of speculative DeFi investment. So then the question is, right, why are DeFi yields still so low? I mean, I just checked and there's like 2%. You get 1% on stablecoin liquidity providing. You get like 1.5%, 2% or whatever just with lending. I mean, what you would expect, or what I would expect, is you'd see capital flowing out from these DeFi protocols back into traditional finance where they have these savings accounts and government bonds, right? Like there is a non-zero demand for trading and borrowing in DeFi, and there always will be, but if the rates are so low, like why would you put your money in there? It would just make sense to go where the highest yield is, and then I would expect naturally the yields then to increase in DeFi to similar to what TradFi has. I mean, otherwise, why not just go to TradFi? Like, it doesn't make sense to go in this way. So like, this is an interesting question. So why is this happening? Right? Why is this happening on some of these, on Ethereum or some of the major protocols, L2s? Why are the yields so low? And just to kind of illustrate this, why this is so strange, right? Let's imagine this kind of leverage trade, where let's say I can borrow 2.4, I can borrow DAI on Aave, right, for 2.4%. I can convert that into USD, right? You pay a couple of percentage doing this, but if you do it with big enough, if you're doing it a certain way, you can pay less than what you're making on the ARB. But then you use that USD and buy some 3-month treasury bills, and they're giving you 5.1%. So all you have to do is have your money locked up for 3 months and you get 5.1. So you've made this 2.5% ARB from borrowing in DeFi. And really that doesn't really make sense. It should be the opposite way around, because there's a higher risk of having your money in DeFi protocols. So you're kind of de-risking. By doing this, you're de-risking some of your crypto holdings and also getting a higher return. Right? Obviously, this is not financial advice. This is just a kind of a way of explaining or showing the kind of the oddity that is these low rates right now. Um, so why is this? I mean, I kind of asked myself this question. I didn't really do a huge amount of research, but from what I would guess is that we have very inefficient and inelastic markets. And that basically means that when things change in the greater macro landscape, like interest rates change, money flows, DeFi doesn't really respond with it. You'd expect money to come straight out from the 2% yields in DeFi into 5% bond yields. But this is not happening. So what's causing this? Why isn't this money flowing? And it could be DAOs and protocols, right? They are set up in such ways that they have large treasuries, or stablecoins often have large treasuries where they just have a lot of their own liquidity, and they'll have their liquidity in their own token or shitcoins or stablecoins, right? And then they have to keep them on chain because it's a DAO, right? You can't take these off chain. Like, who owns them is the problem. So they have to stay on chain, and so they have to go somewhere for generating yield. So they put them into these low yielding liquidity providing, or on Aave or wherever else, right? So this is not necessarily an issue, but it kind of goes to show that there is inefficiencies still in these markets. Like, this shouldn't really happen. Once we have a fully integrated DeFi and TradFi system, you would probably expect to see that these DAOs would have some sort of off-chain treasury management. I mean, I always thought that's the way it'll go. I'm still expecting it to go that way, but I mean, for now, obviously, we don't have that. We don't see that. Right, so this might imply there is some cyclicality of DeFi returns, meaning right now the returns are really low while interest rates are really high. I mean, this is relative, right? So relative to the risk-free rate, we have negative returns in DeFi. And then at another point, you might say, well, when the interest rates go back down, we'll retain the same interest rates and thus have positive risk-adjusted returns on DeFi. So this cyclicality doesn't necessarily bode well, in my opinion, for DeFi as a part of a portfolio, a savings portfolio, because you would want it to be uncorrelated to the rest, or bonds or stocks or whatever. But if it is the case that it only happens and it only is really a reasonable place to invest at 0% interest rates, then I mean, you'd be better off with just having stocks, right? You're just holding Bitcoin or whatever. The benefits of DeFi might not necessarily be there. However, that is not to say that there isn't good things about DeFi. One of the benefits of DeFi, of course, is the fact that it's liquid. And what I mean by that is really, you can withdraw your money whenever you want. Like, compare this to a bond. Like, you buy the bond, your money's locked up for a year. And so, yeah, you get some interest at the end and you get the principal return. So you don't necessarily lose anything if the bond doesn't default. But you can't use that money in the interim. And if you want to lose that money, now you're exposed to interest rate risk, where if the interest rate changes and you try and sell that bond, you might lose money or gain money, respectively. But with DeFi, you can put your money in Aave. You could be getting your 1.5%, 2% yield. And then if something happens tomorrow, you can just immediately pull it. That's, I mean, ideally, right? You can pull a marginal amount. In actuality, if you're a large player, if you have a lot of money, if crazy things happen, you might not be able to pull it out, right? If there's $1 million in some lending protocol and there's like $500,000 being borrowed, but then somebody withdraws $500,000, now all of a sudden all the supply is currently being borrowed. So that means you can't withdraw anymore. So you're kind of stuck. So there is that risk of kind of illiquidity risk. And then you would possibly have kind of bond-like returns and sales if you try and sell the tokens that give you the right to your supply. But for now, and in most cases you deal with, if you have a small amount of capital, you're possibly not going to see this. You're not really going to interact with this too much. It's, for all intents and purposes, it's liquid, and that's the benefit over TradFi. Really, I mean, this is why you would want yield, or this is why you're on chain, right? You can lend one day, immediately go to something else that, like liquidity provide, gets more gains, or just sell and get Ethereum if the market dips and you get a good opportunity. So there's give and take, there's benefits and there's negatives. So with all that said, with DeFi being trash, am I done? Am I completely out of the market? And no, I mean, I was a little facetious. I'm still in the market. I'm still looking for that sweet yield, right? But where I'm looking is a little different now. No longer we have to go for this safe, reasonable, high yield kind of lending and liquidity providing. Given that the market's so inelastic and the yields are so low, you really have to go to these pockets of the ecosystem where the demand remains relatively stable and relatively high, but the supply is contracting. This can be in places where people think, there's not much interest in it. Maybe it's NFTs, maybe it's gaming, maybe it's these just little areas where people are kind of a bit more risk averse and they're pulling their money out and they're going into bonds. So places where the retail usually plays, as opposed to somewhere like a DAO. Anywhere where DAO is investing, you're not really going to find good yield opportunities. You have to go to these smaller little spots where you can find this kind of reasonable interest. So, DeFi might be trash right now with low single-digit percentage returns, but I mean, single percentage bond is even more trash. So, thanks for watching the video. Like and subscribe if you like. If you want to keep watching more of what I'm doing. And I'll leave you with this little picture of Ray Dalio. And maybe one day cash be trash again and DeFi will not be trash. So have a good one.